Herzlich willkommen zu einer neuen Ausgabe SE-Talk. Ich bin nach wie vor in Vancouver und ich habe jetzt ein Meeting mit einer Firma Regen 3. Wir haben schon mehrere Interviews gemacht. Wir sind sich noch nicht ganz klar, wann wir das letzte Interview gemacht haben. Ich glaube, es war 22, er meint 21. Egal, wir werden einfach da jetzt einmal drüber fahren. Mark Redcliffe ist bei mir. You are?
President now.
President now. President.
Yeah.
President sounds always great. I say always I'm president and CEO of my company.
Do you want to trade?
No, not really. Not really. It's your job. But it was the last year was really tough, not only from the markets. The markets itself was really in
Flux.
Yeah. It's a tough conditions, but also you have some issues in the company. So please fill us up. What was the last year, or what?
Sure. Let's do 2022, and then I can give you an update on the last quarter, if that works. So last year, by the end of March, we were working on feed engineering with Coke. Mm-hmm. And we were supposed to have the entire feed package delivered, let's say, the end of June. Mm-hmm. And this is a continuous spectrum between pre-feed and feed. The engineering just continues. It doesn't have a bright line between the two. So by early Q1, we were starting to feel inflationary pressure around us. We weren't sure what was happening. We wanted to slow down and ask the engineering company at Coke, what is the cost of this project? Where are we? And they came back at the end of March and they said, it's doubled. And we said, well, hold on a second. How could it have doubled? December of 21, you were telling us we were on budget. Here we are 3 months later. And you have to remember that the steel prices had spiked. And of course, all of the parts follow the steel prices and things like that. And a lot of our project is steel. So we had done all of our costing in the most inflationary market and supply chain issues resulting from COVID. So we then stopped and we said to everybody, we need to figure out how to fix this issue. So we went into a value engineering process. It took roughly 90 days, and Coke and PCL got together and we went out to the market and we had new pricing done. We figured out how many redundancies we had in the plant, and we scaled back on certain triple redundancies. We went to double, or we had 2 trains or 3 trains, we went to 2, things like that. We peeled back roughly $95 million on the project. We came up with a capital cost of $293 million. So this is moved to the end of June, right? And at that point we said, okay, now we have to figure out what are the next steps to complete engineering. We need to get budgets in place. We need to understand why Coke wants more money for engineering. We haven't changed, they've changed. What have they done? So we spent the next, almost till now, we've spent going out and getting additional quotes to make sure that we keep, I hate to say this, but to keep Coke honest, because they were shifting the costs of the project. So we've received 2 quotes to date. We have a third, we hope, coming shortly this quarter. And from there, we'll make a decision as to which EPC contractor we'll move forwards with. If I fast forward to this past quarter, we engaged National Bank Financial, which is one of the top 6 banks in Canada, on a financing. So I've been here 4.5 years. We have never had a bank back us. We also engaged in the last, I'm going to say 6 weeks, Raymond James out of the United States. And we are dealing with their debt team. So we're looking at things inside the Inflation Reduction Act and the Department of Energy's loan processing office to see what we can tease out of that. That's more long lead, but that's on top of the existing debt packages that we have in front of us, like Export Development Canada for $108 million, and we have a handful of European institutions that are interested in participating in that. If I go back to National Bank, they basically said, look, we will size the project debt based on the new capital cost. They've come up with a 60-40 debt to equity ratio split. So if I'm using loose numbers here, roughly 220 million of debt and 150 million of equity. Right? So now National Bank is focused on the equity side. They've basically launched with a team of 15 bankers. We meet with them 2 to 3 times a week right now. We have recreated our data room inside National Bank's video data room. They have built another model and refined our existing model, which was ridiculously robust. 24 tabs. If you're an analyst, you'd love it. I don't. But moving forwards, so National Bank is, I'm going to say, and people in Europe love to hold me to timelines. I'm telling you what they're telling me this week. I met with them yesterday. Roughly 3 to 4 weeks away from launching, and we've already figured out who they're approaching institutionally as well as strategically. So that's in their hands. We just keep feeding information and refining the messaging and the confidential information memorandum, which is about 50 pages, and the data room. Go to Raymond James. We are working with their governmental debt side. We're in Houston. We're also working right now with a team of sustainability and energy investment banking, and they are looking to how they can enhance the existing work on the debt side. So we are looking at other opportunities inside the space and inside our sector of facilities that are coming up and available on the market in a way that we can fast track cash flows, right? Because everybody's saying, well, you're going to raise money and then you're going to go and actually build this thing. It's going to take you a couple of years. That's true if that's all we were focusing on. That's our primary focus in Texas. But we have to also keep our eye in the market and understand, is there something else we can do that's accretive to what we're doing? Can we purchase a stage that's already operational with people and permits? So yes, we're looking at those in conjunction with the team at Raymond James. We also have a couple of other projects that we're looking at that are turnkey. We would move into them and we would retrofit them with our second stage. So you would move from making a Group 2 product to a Group 3. And that's important from a cash flow perspective because you're looking at a facility that might be making $2.50, $3 per gallon, and you move into a Group 3, you can make $6.25 per gallon. So I'm digressing a little bit, but let me bring it back to the last couple of weeks because that's really what people care about right now. We knew that we were coming up on I'm going to call it an exit ramp with BP. One of the clauses inside the contract we had with them for the offtake was a construction finance clause. It was if you don't raise the money by March 31st for the project, it's one of those things that we can walk away from. So we were cognizant of that. The market is it's a public document, that particular term. So nobody was hiding anything. We went into this quarter to raise some money, right? So we did that at 75 cents with a half unit, put about $2.7 million into the treasury. We minimized the dilution. We were still oversubscribed, but we minimized the dilution. We were in constant contact with the team at the BP Products North America trading unit. Okay, siloed team, very specific tasks, fuel trading and lubrication. We then had engaged National Bank and we had engaged with Raymond James in the United States. We've also been talking to a third bank, just so you know. I refer to them as a Canaccord Light for people who understand the junior markets, but they're more, momentum driven. Right? So we are working with all of these. We've updated we've updated BP, and we go into discussions. And what we did in the background while we're waiting for them to tell us what they're going to do is we reached out to a woman by the name of Christine O'Grady. She was our lead negotiator at BP when we did this 3 years ago. She has since left and she has agreed to consult with the firm. So we phoned her up and we said, Christine, you're in Chicago. What do you anticipate happening? And she says, we got such a good deal when we were at BP with you on your offtake that I can't see why they would walk away from you. It would be illogical. However, they do practice a deal cadence. So they do have a practice of reviewing long lead projects on a periodic basis. They'll have hundreds of deals. And if it doesn't fit in their timeline, they could walk. But I can't see why they would. Now, we also know that the lead trader of base oils was reassigned in London, a woman named Annie that we had dealt with for the better part of 15 months. So she had moved over to renewables fuel trading from base oils. It's a strange one. We didn't know what that really meant, but we thought we were solid and locked in. We also went to our lubrication offtake sales consultants at a firm called Libby & Dion. They're former Shell traders. And we said to them, just in case, go out to the market on a no-names basis and tell us what we would get for our products. Right? We gave them the specs, and they went off to 9 different houses, and they came back and said, well, you can get $1 more per gallon for your Group 3, and you can get $2 more for your Group 2. Rough numbers. I said, okay, well, that's good too. Fast forward to Monday the 3rd, get a phone call from Christine's boss who had taken over our file. He's based in Chicago. And he says, I'm just going to rip the Band-Aid off. I'm going to tell you we're exercising our cadence. There's nothing wrong with your product. We're literally just, you didn't meet this timeline for funding. We're going to give notice. Okay. But I also want you to know that Castrol had interceded in the discussions last week, and they want the products. He said, well, why don't you coordinate with Castrol, and we can hand off to Castrol? And that had always been the plan during the first 5 years of the Offtake-Agreement. And they said, well, we don't do that. We work here in this bucket, and they work in that bucket, and they have their own procurement team. So we said, okay, well, we'll reach out to them directly, and we'll talk to them. Of course, we're sitting there going, this is not good. The markets will not like this. If we were a private company, nobody would know.
That's for sure, yeah.
But everybody knows. So the first thing we did was we phoned our key stakeholders. And by that I mean our bankers. That was number one call. We talked to national banks separately, and they said, we're not worried. The supply-demand imbalance is too great. We know you'll sell the product. On top of that, the fact that BP is no longer taking the product, you can now talk to other parties about strategic investment. So other super majors, other majors, other trading houses. So that was great. That was a really nice phone call in a dark hour. We phoned Raymond James, and we spoke to them in Houston. They said exactly the same thing. Inconvenient, but we know you're going to sell it. Go back and start talking to the groups that you were previously talking to. Okay, well, it's wonderful. We talked to Coke Modular, our second stage vendor. They said, no, we understand. Thank you for the heads up. And you have to remember, this is 8 o'clock at night in Houston, right? And we're going to market open at 6:30 in the next morning. The banks came back and said, we're going to help you with your press release. Both teams. So we were working at 9 o'clock at night Pacific, receiving feedback from 11 o'clock and 12 o'clock, depending on which time zone the bankers were in. So they were it was collaborative. It was very nice for the first time to have some external force helping you. And remember, we have roughly 25 bankers now working on our file. We then crafted the press release. We put out the press release. And the very first thing we started doing was reaching out to all of the super majors, and trading houses that we had previously been working with. And the reason I say previously working with was because we had always had the ability to do future projects with BP and show them projects that we wanted to do. And if they passed, we had to find somebody else. So we knew those relationships would take time to establish. So we have been establishing those over the past year. So here we are with these well-known houses and firms and saying, okay, do you remember how we said we couldn't sell you base oil? Well, now we can. Do you remember how we were talking about potential investment and you said you couldn't invest without having access to offtake? Here we are again. So that has started. We've also obviously reached out to Castrol. So things are moving along nicely. We have completed testing now with a super major and with an incredibly large blender globally. So technically, we're all fine. Now it's commercial time. And that's where we are with that. As I mentioned, we've brought Christine O'Grady on as a consultant to the firm because of her experience inside of BP, and we think that will be accretive not only to the financial roadshow, but also to the negotiations with other parties. One of the things we have previously mentioned was that we were looking at a path to monetizing greenhouse gas credits. We are still working on that. One part of that is to find a platform where you can actually trade. We believe we have established that relationship over the past 3 years. We are waiting for that financial entity to receive regulatory approval to put out a press release. So that's real. We were talking to them in December. We were talking about that publicly in December. It's beyond our control, the timing of that release. But we talk to them every couple of weeks just to find out where they are. They're ready to go. They're just waiting for a regulator to tick a box. And we've seen the press release, okay? I mean, it sounds a little bit leading, but the reality is it is there. I just couldn't tell you what day it's going to be published. And I couldn't tell you what it's going to say. All I can tell you is it's a nice relationship to have.
Okay.
It will be appreciated in the market. What else are we up to? So we're waiting for the third quote for the EPC contracting to deal with FEL 3. We've already started portions of FEL 3. That was part of the continuous process. We talked to Advario a week ago as well. I didn't mention them. Important, right? So former oil tanking. The site is still available. They're still interested in working with us. They're not concerned that BP is not there. So that's a positive as well. They are very keen on the green aspects of our business. Positive feedback coming from the DOE as we move down that application process. What else is going on? I mean, I think that's about it for right now.
But this means also that we can expect maybe big news flow, big news, not news flow, it's not too many news coming out, but maybe when you reach some points, first is how you can optimize the production itself. Then you're working on it on the side, but also on the financing side, and maybe partner side.
Yes.
So that's the three major development what we hopefully can. Do you see a timeline on it? So maybe you say really we can do it this year, or this year we expect that we're coming up with new partners or new offtake, or is it too early?
At the risk of being accosted by the retail base in Europe, because they're very timeline driven. And I'm not saying wrongly or rightly. I'm just saying they are the most vocal group of shareholders I've ever experienced, and that's fine. At least they're involved and interested. We are working on the offtake right now, right? It takes as long as the other party will take to put terms in front of us. We're a willing recipient.
But you talk with many of them, so
yes.
And they know exactly you're talking with other one too. So that's
half a dozen right now. Half dozen firms we're talking to.
Should speed up a little bit the process, then they know exactly when they are really interested in the product. Then they know exactly when they wait too long or they need too much time to do their homework, that maybe the other one is quicker, make a better deal. Or
absolutely, yeah, and we know that the price should improve over what we have already done. Without giving away all of our strategy while we're negotiating with people, I think we're comfortable saying that we should get better prices. What you've seen in the market, if we get down to that level, the Group 2 producers who are out there had the best prices in their lifetime last year. Those prices went $5.50 per gallon for a Group 2. They're now back around $2.50 to $3 per gallon. So they've already returned to earth. The Group 3 disengaged at that point. It's decoupled. It stayed up around $6.25 per gallon. It's flattened out.
How related are also the numbers to the existing oil price? Is there a relationship or not?
There used to be a very strong correlation, about 85% to WTI. What we found during COVID was there was a disengagement. There's literally no relationship right now for the Group 2 and the Group 3 base oils. And that's an unusual situation. It's been that way for almost 2.5 years. But we know that if you look at the structural market for Group 3, specifically in North America, there's about a 27,000 barrel per day shortfall for domestic supply, secure onshore supply of Group 3 base oils. The majority of that, 80% of that shortfall, is made up with imports from South Korea and the Middle East, primarily Shell Cutter and ADNOC, groups like that coming out of the UAE. So looking at that, we have the tailwind of the US government looking for security of supply. We have the strong tailwinds of greener products, recycled products, transitional products. One of the talks we've had with one of these blending groups is more on the scientific level, and what can you use the Group 3 for, depending on what specs you're pulling out. And there is the potential for hydraulic shock absorbers if we can tweak some of the formulation a little bit. Well, remember, shock absorbers are used in EVs, right? So there's a myriad of uses for these products. It's not just in passenger car motor oils for internal combustion engines. So there is growth, there is differentiation of demand, and on top of that, there's more than one party in talks with us right now. So.
Now, the interesting thing is that for example, I really expect a higher oil price, and when the relationship is with them, that should also bring the price up. Coming back to the finance side, you're talking with National Bank and with Raymond James for the debt side. First, equity, strategic investor always means a dilution for the shareholders.
It doesn't always mean that. We're looking at the project level.
Okay.
So dilution where? Dilution at the public company? Not our goal.
Okay.
Dilution at the project level? I think everyone can live with that.
Yeah, but that's the point.
Sure.
And make clear that you're not dilute the
It's not our goal.
Okay.
People have different asks. Different parties, finance groups will ask for different things. Some will ask for a sweetener at the public level. They want some participation because they know that you're not working on one project. They want to be carried into other projects.
That's understandable. Can live with that. But this is then more strategic, and that's a total different crowd. The problem is more when you talk about dilution, where you know exactly 4 months later the stock's coming to your market when the price is right, and then the hammer down the stock. That's more problematic. By financing, next question is that the financing need an offtake-agreement or not? Or you can do the financing without the offtake, then, as you say, we are quite sure that you will sell the product.
Understood. So the advice we've received from the banks are that it's nice to have the offtake going on to the roadshow in the next 3 to 4 weeks. It's not necessary, but it makes life easier. From an equity standpoint, it's not necessary to have the offtake signed and closed because they will understand the marketplace. From a debt side, yes, you would obviously want your feedstock, your offtake, your engineering completed, all of those things. But you can receive conditional offers in the interim, right? Hence why we have a conditional term sheet from Export Development Canada, things like that.
You say you're going on the roadshow with National Bank the next three weeks. So when
I said 3 to 4, but you're
4.
saying 3. See, I'm already in trouble.
No, it's 4 weeks in the next month. In the next month.
Yes.
Okay.
Yes.
So in May.
There we
Let's
go.
say in May.
May, June.
May,
Okay.
June.
Right.
Can we expect immediately outcome of it, or is it more so nice to know each other and we meet us the first time that we maybe have a nice discussion and maybe find out if we can work together, or is it really that we coming on the end of the roadshow, hopefully coming and say, yeah, okay, we do a deal?
We understand, again, this is National's process, so we ask a lot of questions. We said, how does it work? It's a phased process. They go out with a teaser to a larger audience, a defined audience. They take expressions of interest. We move into a non-disclosure agreement. Invitations go out to that group. They go into the data room for phase 1. We determine if they need more information or less.
Mm-hmm.
Are they able to make a conditional offering? Then they shorten down the list and they move to the second phase. How long that's going to take really depends on how much interest there is in the first phase. Mm-hmm. So our goal has been, while we're working for the last 2.5, 3 months here to build these data rooms and build these models, is to answer every question in advance or anticipation of it being asked. Mm-hmm. So we can remember, capital has to be deployed. It's not going to sit on the sidelines because the world is upset about Silicon Valley Bank or Canadian mortgage rates or interest rates. It still has to be utilized. It still has to have a return. So yes, borrowing costs may have gone up, but the money is still there. It's just been pooling and waiting, and I think that's one of the interesting things about the financial sector. It's very resilient, and it freezes up at first, but then it has to come out again. And so we believe that we tick enough boxes that if you remember, there was this mania, if you will, about ESG a couple of years ago. A lot of bad deals were done during that time. A lot of ridiculous valuations in the SPAC market happened, right? I know people who have had $2 billion valuations, and they now have $20 million left in the bank, and they're desperate for their stock is trading from $15, now they're trading at $1. And those are big companies, or were big companies. We were fortunate enough to avoid a lot of that headache, but what we have are the fundamentals of an industrial deal. None of those fundamentals have changed. If anything, those fundamentals have become stronger. We have continued to de-risk. We have continued to provide more certainty. So we are an industrial company. We are using proven technologies which have a moat around them of patents to protect the process. But again, we're using 30-year-old refinery technologies that we haven't invented something secret or a black box. There's none of that. The offtake contracts will come. I don't think there's a question. It's just the timing of when we will be able to announce those. The economics are sound. And then on top of that, you have all of these potential for greenhouse gas emissions and quantifying, but monetizing. We don't include any of the monetization figures or calculations in our current financials. So when we talk about $335 million top line or $200 million of EBITDA, none of that includes an allowance for what we believe we should see down the road. Even if we were making $2 or $3 a credit, right? It's still not included. I think realistically the credits will be significantly higher, but let's be conservative. We count them as zero. We'll work on the path. Right?
Okay, but what we can say is that the next 3 to 4 months really is a very interesting time period.
Yes.
To see from financial side, also on the offtake side, very, very interesting times.
And engineering.
Yeah.
Absolutely.
And engineering.
They're all intertwined, and they're all interdependent upon each other. But I feel that this next quarter, the next 2 quarters, even though we're going into summer effectively, we'll be extremely busy, and we'll be able to put out some nice press for people.
Okay, Mark, thank you for the update. I think hopefully we can do it in 3-4 months. So after we see some maybe results, or we not see results, then it's also interesting that we can maybe you can give us an update on the process, how it looks like. What I forget in the beginning is that I have a conflict of interest. I'm a shareholder. It's very important. Also ich habe einen Konflikt of Interest. Ich bin Aktionär. Ja, wir haben jetzt sehr viel gesprochen über viele Dinge. Das Wichtigste ist, dass der Deal mit BP im März gecancelt worden ist, und das hat auch dementsprechend eine Reaktion nach sich gezogen. Warum? Er hat es relativ ausführlich besprochen. BP tut natürlich ein Review machen von allen ihren Deals, die sie hat mit Third-Parties, und da war eine Exit-Klausel drinnen, dass wenn bis zum März die Finanzierung des Projektes nicht steht, es geht ja darum, eine quasi Raffinerie, die hier aufgebaut wird, ist mit der Technologie, quasi das Öl aufzubereiten, umweltfreundlich. Das ist ja ein Recyclingprodukt. Das ist sehr wichtig auch in diesem Zusammenhang zu verstehen. Dass die halt quasi das Recht gehabt haben, diesen Deal zu canceln, und haben das auch gemacht. Und sie haben auch gewusst, ja, es hat halt einfach nicht mehr reingepasst. Sie sind jetzt im Prozess drinnen, um das mal zu besprechen, mit verschiedenen anderen Offtakern, denn das Problem war natürlich, wenn den Deal, was sie mit BP gehabt haben, hat auch inkludiert, dass sie weitere Projekte als erstes mit BP besprechen. Diese Problematik gibt es jetzt nicht mehr, das heißt, sie haben wieder die Möglichkeit, mit allen zu sprechen. Das wird auch schon gemacht, haben sie im Vorfeld auch schon teilweise gemacht. Sie haben auch eine Preisbesprechung gemacht mit anderen, haben Preise heben lassen. Sie hätten durchaus $1-2 mehr bekommen können für ihr Produkt gegenüber den PP-Deal. When I understand you right, you do a price survey so that maybe you get a better price also compared to the PP deal. Was it right?
The results were positive, yes.
Positive, ja. Also ich habe es mir jetzt immer nur mal gefragt, ob das, nicht, dass ich da irgendeinen Blödsinn jetzt sage, also sie haben auch eine unabhängige Preiserkundung gemacht für ihre Produkte, wenn die jetzt auf dem Markt wären, welchen Preis würden die erzielen, das war besser aus wie mit dem PP-Deal. Das ist, also PP-Deal ist gecancelt, sie schauen jetzt wieder auch mit den Super-Majors, mit den anderen im Gespräch oder mit den Majors, ob wer das Produkt kauft. Und da könnte ein Newsflow dementsprechend kommen. Wie lange das dauert, hängt natürlich von den Partys ab, die dann das dementsprechend auch, also das ist ja, wenn man so mit großen Firmen redet, dauert das immer extrem lange. Das ist der Punkt 1. Der zweite Punkt ist allerdings Finanzierung eines Projektes selber. Da haben Sie jetzt einen Deal mit National Bank, und National Bank ist einer der größten Banken hier in Kanada, und mit Raymond James in den USA. Raymond James kümmert sich um die Fremdfinanzierung, National Bank kümmert sich um die Equity-Finanzierung. Jetzt bin ich natürlich hergegangen, was heißt das nämlich auch dilution-mäßig für die Aktie. Er sagt, auf der Mutterebene, also der börsennotierte Ebene, heißt es keine Dilution, sondern das ist eine Dilution auf der Projektebene. Das heißt, auf der Projektebene sind dann die Investoren daran beteiligt, und das können durchaus strategische Investoren sein, die dort drinnen sind, und die erhalten natürlich dann ihren Anteil aus diesem Projekt, und an die Mutter geht natürlich dann dementsprechend ein kleinerer Teil, weil ja Finanzierung passiert auf der Projektebene und nicht auf der Mutterebene. Ganz ein wichtiger Unterschied, denn das sichert natürlich die Mutter ab, aber auch in der Hinsicht, dass sie halt Dilutions deutlich nach unten geht. Und genau, das war die eine Finanzierungsseite. Interessant war auch, er hat gesagt, wie der Deal mit BP gecancelt worden ist, da waren ja die Banken schon involviert, die haben mir auch geholfen, wie muss man die Pressemeldung aufbereiten, wie sollte man das dementsprechend schreiben, damit auch am Markt dementsprechend das so verstanden wird, wie es sein soll. Die dritte Ebene, wo gearbeitet wird, ist engineeringstechnisch, also auf der Entwicklung des Projektes selber. Denn die Kosten, wie letztes Jahr die Inflation so war, haben sie natürlich nachgefragt, bei ihren Technologiepartner, was das bedeutet jetzt mit dem Anstieg der Inflation für ihre Projektkosten. Und die hätten sich da innerhalb von 3 Monaten verdoppelt. Warum? Weil natürlich sehr viel Stahl involviert war. Stahl hatte zu diesem Zeitpunkt einen Peak gehabt und das hat alle Komponenten nach oben gezogen. Sie haben dadurch jetzt angefangen, wieder sagen, okay, nicht den Prozess an sich zu verändern, das ist ja nicht wirklich machbar, aber andere Angebote reinzuholen. Sie erwarten jetzt das dritte Angebot auch, damit sie halt wieder runterkommen von den Kosten, um die Finanzierung einfach besser sicherzustellen. In Summe, summarum, muss man sagen, sehr viele Informationen, nicht unbedingt jetzt die beste Entwicklung natürlich, mit dem ganzen Deal, der mit BP natürlich geendet hat. Allerdings ist es so, dass in den nächsten 3 Monaten, 4 Monaten wahnsinnig viele Informationen kommen. Sie starten mit National Bank Offtake-Agreement Seiten in 4 Wochen, ja, immer 3 bis 4 Wochen, ich habe gesagt, wir sagen 4 Wochen, irgendwann einmal Mai, Juni wird da einmal die Roadshow dementsprechend auch beginnen, die Talks mit den Investoren. Und die nächsten 3, 4 Monate werden extrem spannend. Also bis Juni, Juli wird sich relativ viel tun und ich habe mit ihm auch schon besprochen, es macht vielleicht Sinn, dass wir sie im Juni, Juli wieder treffen nicht, aber über Zoom-Call machen, um ein Update zu bekommen, denn dann wissen wir, wie der Prozess läuft. Wenn dort Nachrichten rauskommen, können ja durchaus sein, dass auch schon Nachrichten rauskommen. One question is, I talked maybe when we can expect, and that we say in 3 months or 4 months, maybe we do a Zoom conference to get an update on this financial process. I think financial process is very important stuff. Yes. For sure, the engineering too. Then the engineering feeds the demand on capital. And maybe in 3-4 months we know more about the market. So, but we talk always about National Bank and their equity raise, but what this means also for Raymond James, so you need not only the equity, you need also the debt side too. Is it also that you're working immediately in the same time when you're coming up with the equity, you're talking with the debt side, or how this work, or the debt side say first we need the equity, then we're coming up with the debt?
Yeah, sure. Traditionally, for projects like this, you would go out and secure your equity first, and then size your debt, right? In our case, we were fortunate enough to receive conditional offers from Export Development Canada and a couple of other groups on the debt side. Mm-hmm. What we're doing here is National Bank says, look, this is taking a while. Let's advance this process more formally. Let's go out and target the equity side. But remember, we're going to be talking to groups that are so large that they will have 750 funds, whatever it happens to be. We may be opportunistic. And of course, our relationship, the way we've structured them with both National and with Raymond James, they're non-exclusive. Mm-hmm. That allows us to bring on more entities. It allows us to talk to other parties as well. Mm-hmm. You know, we're happy to introduce them to National or to Raymond James. It's not an issue for us. There's no pride of authorship here. It's all about the success of the project for our shareholders. So one of these other groups that we're now talking to as well in the States that I briefly touched on no names basis, you know, their goal is to go out and finance mm-hmm. FEL 3. Right? Mm-hmm. So we have many different irons in the fire here. Mm-hmm. They're not sequential. Mm-hmm. They're happening all at the same time. Mm-hmm. Okay. And so there should be news. Right?
Okay. Okay, also normalerweise ist es bei Projektfinanzierung so, dass du zuerst mit dem Equity-Portion raufkommst, oder mit dem Eigenkapital und dann mit der Finanzierung. Bei Jana läuft das allerdings sehr parallel und sie haben nicht exklusiv Agreements. Das heißt, sie können jederzeit auch andere Partys noch involvieren, die auch dementsprechend Finanzierung mithelfen. Bin gespannt, die nächsten 3-4 Monate können wirklich sehr, sehr spannend werden und könnten einen sehr, sehr interessanten Newsflow bringen. Auf jeden Fall wahrscheinlich einen deutlich besseren Newsflow aus wie in der letzten Zeit. Ja, das war von Regen 3 im April 23 Vancouver. Tschüss und Baba. Thank you.
Thank you very much.